Hello, YouTubers, friends, compatriots, bootlickers, shield dust, lasers, peasants, vassals. I'm your useful idiot, and today I want to talk about Bank of America. I know they're not really on anybody's radar recently. I just think they're a great example of what is happening in the banking industry. And I say that not only is Bank of America a zombie bank, but Bank of America is king of the zombie banks. And the reason why I started thinking about Bank of America again recently is because they had a $2.4 billion settlement recently. And, of course, this was to settle the securities fraud case against them because of their acquisition of Merrill Lynch and not telling their shareholders what the pitfalls were of acquiring Merrill Lynch, which the pitfalls were $5.8 billion in bonuses paid out as the bank crashed, as well as $15 billion in immediate losses. And so anyway, they've settled for $2.4 billion. And this is really incredible when you look back over since 2009. Bank of America has paid out $29 billion in settlements and fees, including $11 billion in the foreclosure settlement, and also $8.5 billion in repurchases of mortgage-backed securities. That doesn't include legal fees. So is Bank of America merely exist to extract legal fees from and settlements from? It would appear so. $29 billion seems like a lot of losses to be paid out for fines and settlements in the last 3 to 4 years. And I'd remind you, too, that they have been shedding employees and assets like nobody's business. Immediately in 2009, they announced 35,000 people were laid off. And, of course, that includes a lot of people from Merrill Lynch. And then their acquisition of Countrywide as well. And then their acquisition of Countrywide, not only has it lost Bank of America $35 billion in mortgage business and associated lawsuits, but they also, of course, haven't recognized all the actual mark-to-market losses on their Countrywide portfolio or their Merrill Lynch assets. So this is another reason why they are a zombie bank. You can add up all the record profits you want, but when you have no markdowns on assets that have deteriorated that much, there's not much left on Mother Hubbard's shelves. And of course, Bank of America is exposed to $125 billion in home equity loans and junior liens on residential real estate. And, they had that $3 billion fine for Fannie and Freddie for selling faulty mortgages. And then the list of all the things that they have shed just in the last year. In February 2011, they sold off the Balboa Insurance Company. April of 2011, sold off their UK portfolio of small business loans. In May of 2011, 7% stake in BlackRock. That had to be lucrative. August 2011, all their operations in Spain. August 2011, they sold all their servicing rights on 400,000 mortgages to Fannie Mae. August 2011, they sold $8 billion in Canadian credit card ventures. August 2011, they sold half its stake in the China Construction Company. That was worth $8 billion. In November 2011, they sold their other half of that, so another $16 billion. September 2011, they sold 80 million shares of HCA Healthcare, obviously a very lucrative asset. September 2011, they sold all their commercial real estate loans. September 2011, they sold their stake in Pizza Hut. March 2012, they sold all their Irish credit card portfolio, and they're selling off parts of Merrill Lynch recently. They sold off the Merrill Lynch campus, and they also sold off just this last month the Merrill Lynch foreign wealth management operations. So Bank of America is shedding assets and employees like nobody's business. They're now laying off another 16,000 people by the end of this year. So, by the way, Merry Christmas to all you Bank of America employees. But now, coming into New Year, you can brag that you worked at the biggest zombie bank in the world, king of the zombie banks. And they also have $53 trillion in derivatives exposure. And this is where we get to the heart of our risk. Here is an insolvent bank that has not written down all the deterioration of all its assets. It's selling off profitable parts of its business left and right to get back to its core business. It's hoarding money and not making any loans. It's paying out huge settlements and fines, and it's not generating too many new ways to increase revenue. We can remember a couple times they tried to create a $5 debit fee and some other ways to punish their all remaining customers, and that didn't fly. So they are continuing to downsize and are, for all practical purposes, a dead man walking. So, and of course, this process can go on forever because what keeps a zombie bank afloat? Tim Geithner in the Treasury, Ben Bernanke at the Federal Reserve, and Barack Obama at the White House are all keeping Bank of America walking, feeding them intravenously so that they can continue to function at least long enough to hold this whole thing together. So anyway, like I say, I don't think Bank of America is really on anybody's radar right now, all except for the fact that they paid out another $2.4 billion settlement. But I wanted to take a quick snapshot of just exactly this whole paradigm shift that's going on at Bank of America, how they epitomize the zombie bank, and we can look for more deterioration in Bank of America in the future. Don't be fooled by the fact that their stock value plummeted and has now regained because they are lean, but they are not generating any new revenue at this point, and things could be grim. I'm a useful idiot. Don't you be one too.